Hi everyone, Jumping from mykayaplus here. Today I'm going to talk about the difference between investment versus trading. This video is going to tell you what is the main difference between the two, and then what is the pros and cons of each tactics. If you are new with stock markets, I think it's very important for you to find out which investment strategy you wanted to go after, because fundamentally it's quite different, and the tactic or the skill you need to pick up is also quite different. Let's get started with an example for you to imagine the difference between the two. So just imagine in front of you there's a piece of empty land, and then this land is having some of the resources that can be finite because it's a fixed empty piece of land. If you are a trader, basically you just wanted to make sure whether this land can go into a higher price due to some sensitive news. For example, there's a tips from some of the forums saying there will be a famous developer going to take over this piece of land, and then he's going to develop the things. So you're waiting for this kind of moment, and then you sell higher. So this is how you make profit being a trader. On the other hand, if you talk about another strategy, which is investment, you will be buying the land and then putting it in a very long term manners. It can be go up to, let's say, 5 years to 10 years, and then this piece of land will turn into something real. So it can be turning into a place that's having a lot of new buildings, and then the whole piece of land, the value will goes up. Or the same piece of land, instead of going for property developments, it can turn into a recreational park, and then you have a lot of people coming in to actually do exercise, and then for them to do exercise they need to actually pay for some fee. So this is how you can actually make a profit, because the intrinsic value of the land has increased due to some of the changes being made or happen throughout the 5 to 10 years. So fundamentally, this is the main difference between trading and also investment. So maybe I give you a very easy way for you to imagine the difference. So in short, if you talk about the difference between time period, trading is always about short-term stuff. So it can be even doing day trading, or some of the people they practice weeks tradings. But for investing or investment, usually they will target a much longer investment periods. It can be going to months to years. And then what is the key focus of the tools? So for trading, of course, their key focus is what is the movement within the markets. Is there any news that is going to actually stimulate the price movement? Is there any positive news going to be come out from the owner of the companies or whatnot? But then if you talk about investment, on the other hand, usually we'll look into something very, very boring, or we call it the fundamental of the companies. So whether the company is making money, whether the management is a good one, whether they are having a very good business model that can actually result in a very good profit returns in, let's say, 2-3 years time. So you're looking into the fundamentals. So because of the two difference, the buying patterns is also kind of different. So for trading, the first thing you will think about is actually trying to buy low, sell high. But actually most of the time for trader is about buy high and sell higher, because your time frame is so short. If you're doing day trading, when you go in, you're hoping it to go higher. So you won't know when is actually the low point. So it's about buy high and try to actually sell higher. But when you talk about investment, it's totally different things. It's not about the stock price anymore. It's about buying a strong company and sell away the so-called weak company, because eventually the intrinsic value of the company, the strong company, will actually being reflected inside the share price. It may not be as sensitive as a news that come out and stimulate the share price to go up very high, but then if the company is good, in few months time or few years time, it will eventually goes up. So that's why it's important to look into the fundamental, and also trying to secure the so-called strong company by your definition. So if you talk about what is the price movement sensitivities, of course for trading, it's kind of straightforward. You definitely need to cut loss if the price go lower. Let's say you're practicing day trading, of course you need to set the cut loss point. But then for investment on the other hand, since your philosophy is about buying a strong company, so if the price goes down, it actually gives you an opportunity for you to buy more at a lower entry price. So the whole thing is very different and from a very different perspective. And then the last part, which is the most important part, is how you make a profit or make money throughout these two tactics. So for trading, it's quite simple. It's always about capital appreciation. You buy at 90 and then you manage to sell at 100, you make a $10 or 10 ringgit profits. But then for investment, it's slightly different. Of course, you can still make from the capital appreciation, meaning you buy $10 this year and then 3 years later become $50. So you make the $40 difference. On the other hand, you also can get some profits or return through dividend that is actually being issued by the company. So this is the whole fundamental difference between trading and investment. And then the next thing you wanted to understand is what is the pros and cons of the two things, right? So I think it's very straightforward. For trading, it's all about making quick monies. Everything is fast. So as long as there's any price difference, you'll be able to make a profits. And then, but it also draw some of the disadvantage because you will be needing to put in a lot of focus by monitoring the markets, and then you will need some sort of technical skills to understand the chart and always be alert to any news that's coming out, and it might impact the share price. So this is the disadvantage of it. But then if you move towards the other side of things, which is investing, usually they don't need a lot of intensive kind of time where you need to focus and try to secure the right time to actually exit. And then it also don't need you to be having a very good technical skills. So for layman, actually investing is one of the easier way compared to trading. And of course, some of the disadvantages, you might feel sad because when the strong company that you buy in suffer a short-term volatilities, and then you will see a paper loss inside your portfolio. And then one of the key difference is you will need a stronger holding power because you think this company is actually a strong company. During the downtime, you need to have a good holding power, meaning you cannot just sell because of short-term market volatilities, and then you definitely cannot make fortune in the long term. And then lastly, besides you can hold, the next thing is you need to have the capability to, or on the other hand, you need to have enough capital for you to do averagings, meaning when the bear market strikes, you need to have enough fund to actually buy to average down your entry price. So basically, this is the main pros and cons of the two tactics. So hopefully this video gives you a perspective between the two different tactics. And then before you start, please make sure you take a step back and think which tactics is the one that's more suitable for you. And for me, the personal advice is if you are new to stock markets, please don't start with trading. Always start with investing because this is the right mindset to go. It's always easy to try to spot a company that is strong, and then you just need to buy in it, believe in it, and the time will be the one that gives you the rewards. So hopefully this video gives you some perspective, and feel free to leave a comment if you want us to cover other similar topics like this. Thank you.